Gwen.
Hi, everyone. Dale Pinkert here at TradeGateHub.com. And what a great time to be talking to Justin Hune at Uranium Insider. Justin, thank you so much for giving some of your time today to talk about your passion in the market.
It's my pleasure. Yeah, thank you for having me on. I appreciate it.
Yeah, it took us a few attempts to get it done, but you know, you don't lose till you quit.
Indeed.
You know? Okay, yeah. So I'm always interested in the beginnings of people and what drew them into the financial markets and how early did they have this desire to, you know, analyze and put together the geopolitical jigsaw puzzle or mining and what's important to the economy, and more than that, become a successful speculator. So how did it start for you?
Sure. Well, my investing journey started almost 15 years ago at this point. I had honestly, what initially got me interested in it was sort of the risk involved. I don't know why that sort of pulled me in, and the idea that it was just a more hands-on approach to building wealth and building savings rather than just stashing cash away. Which
what were you doing prior, before you started investing? You have a career doing what?
Prior to investing, I had been an organic farmer. So for a while, I was managing a small organic farm. I started an organic seed company.
Cool.
With a couple of friends of mine, and operated that for a number of years, and it ended up just leaving that business. My partner at the time bought me out, and I kind of went in a different direction. But yeah, my early beginnings, honestly, from way back, I had a very strong passion for sustainability, and for really kind of critically thinking about sustainability. So rather than actually just kind of throwing out buzzwords and hopping on the latest quote unquote green trend, just really thinking deeply and practicing as well sustainability as much as possible. So to give you one example, when we started this farm, it was relatively small. It was about 1.5 acres, and in the same town I live in now in Southern California. And so we had a mutual friend who leased it out to us for a very small amount of money per month, and we all kind of split the tab. And we literally went out there with forks and shovels and wanted to see what we could do by hand. So we cultivated the entire acre by hand for about 3 years.
Wow.
Just with human labor to see what the inputs were and what the actual process was involved. And that learning process was astonishing to really fully understand.
I don't think there's an occupation that assumes more risk than agriculture, farming in general, because, you know, if you have a good year and you bring in a bumper crop, everyone else does, and you get lousy prices. And then when prices are good, you have a short crop. So, you know, plus all the variables and things like Grande El Nino that's happening. I'm a little bit surprised that after that you didn't look into grains and becoming a grain trader. Do you pay attention to that part of the market?
I do a little bit, but honestly, I'm less interested in kind of the traded commodity aspect of agriculture, and more interested in just the actual production of food and sustainability aspects of it.
Okay. All right.
And so, of course, we were doing it on such a small scale. It doesn't really compare to large scale monocrop, you know, 10,000 acres of corn or wheat or whatever. That's a whole different story. And that's really what the foundations of food production, you know.
Well, you can't eat uranium. Can't eat uranium or gold, can you?
No, you can't.
Yeah, I mean, my exposure to uranium was through radiation therapy. So, you know, you know, I understand the power of it. And, you know, I thought I'd start off with this. You know, I get taken in by a lot of what happens on social media. And I was talking about that both Russia and Ukraine both had reasons to do this, or false flags or whatever, accidentally on purpose. And you straightened me out. One of your followers sent me that analysis of that nuclear power plant, and there isn't any possibility of a big radioactive problem out of there, even if they hit it with bombs and everything.
Right.
Is that true?
Yeah, at this point, it's true. You know, the reactors, there's 6 reactors at the Zaporizhia plant. That's what you're talking about.
Yeah.
And this is in southeastern Ukraine and in an area that has been occupied by Russia for since kind of the beginning of the conflict. And
right.
This is the largest nuclear power station in Europe. It's an incredibly important, valuable asset. And so it's never really made sense to me that the Russians would want to take it out, especially since they actually have a nuclear arsenal, why they would want to destroy a multi-billion-dollar asset to create some kind of nuclear event. But even if they had wanted to, or if Ukraine wanted to, the reactors have been cold shut down for close to a year at this point. So there's not a lot of heat, essentially, or radiation being generated. And so these reactor cores are protected by very, very thick containment structures. And one of the kind of fear-mongering points that have been bandied about on Twitter is that we're about to witness Chernobyl Part 2, and that's like nothing could be further from the truth.
Okay.
Chernobyl was the worst nuclear accident we've ever experienced in terms of civilian, nuclear, and that had no containment structure whatsoever. And even with that, we had 50 something deaths, I believe, that were direct, and then a handful of illnesses for a number of decades following. So it was a bad accident, but to put that in perspective, considering we've had 70, 75 years of civilian nuclear, and that was the worst accident. It's really, nuclear really is a testament to the unbelievable robust safety history of that technology. And in this particular case, yes, there's no concern of Chernobyl Part 2 coming from.
Then let me ask you this: what could they do to make it look like that? Hit it with a dirty bomb?
I don't know. I mean, it's interesting because it's what can technically happen is somewhat relevant, of course, from a safety standpoint, but what is reported is almost more relevant to what gets shared around the news flow and social media. And then, I guess if we're talking about how the equities of the world would be traded based on such an event or non-event, who knows what they could do and then say that they did. I mean, it's really the sky's the limit. Yeah, but
I know it's like that out there now, though. I mean, it's not just your point and figure charts anymore, and you don't have to deal with this kind of news flow. So, got to pay attention. Right. So let's get to your analysis. And so do you look at, say, for example, I follow a few uranium issues, and Cameco seems to be the blue chip of the uranium sector.
Definitely. Yeah. Cameco is the lead sled dog. It's the largest publicly traded company with an exception of Kazatomprom on a market capitalization basis, but based in the West and listed on major exchanges in the West, it's the number one. It's certainly leading the pack in terms of equities performance. Energy is having a rough day across the board. Every single thing that's related to energy and metals is getting whacked today. So
higher rates. People were not expecting higher yields during what they thought would be a pause. So maybe the market's a little wrong-footed. They're off sides, thinking this was behind them.
On the day that we're recording this, there was a really strong jobs report, and then the U.S. the dollar is up on stilts today. So everything.
Well, you know what? It's interesting you bring up the dollar, because actually
I would pull back.
The dollar is unchanged to lower with sharply higher yields. Okay, I think that's an important thing to notice, is that even higher yields are not giving the dollar much of a boost. You have cable up, the pound up, you have the euro up. So I mean, this almost says the dollar wants to go lower, because if it can't rally with a tailwind like this,
right,
what's it going to be like if it turns into a headwind?
Right, that's a good point.
Anyway, this is about you. So do you look at, say, for example, exploration? I know I follow miners a bit more on the gold and silver side. Is your research about all different tiers, exploration, when they're just starting a mine, producers, What do you feel is, let's talk about, it's
Sure.
really nothing safe, but the safest would be to go with blue chips like Cameco, right?
Yeah, really, I think the safest would be, I mean, based on our confidence due to the level of our research on the sector, our confidence in the price of uranium going higher is extremely high. So betting on that
Okay.
as closely as you can is probably the safest bet. So that would
Is
be
there a
something
pure
like,
play in uranium, Justin?
well, you have something like the Sprott Physical Uranium Trust, which is going to be
Okay.
your most liquid play to expose yourself to the commodity, but it can trade at pretty substantial discounts to its net asset value.
Do you know the
So
symbol?
U.UN.
See, the good things come from them not being planned.
Yeah,
UN.UN.
U.UN. Yep.
Okay, that's stock. Huh. I don't
Or
I
if you
don't see
just
it.
type in Sprott, it'll probably come up. Sprott Physical Uranium Trust.
Because I know there's a lot of risk with miners because they all have it's still a
You can do
business.
U.U. That's the TSX listing. U.UN is the
Right.
in
This one right here.
mhm.
Okay.
That's priced in US dollars, but it's fine. You can
Okay.
still get a
Yes.
decent proxy. There you go.
1206. It looks a lot like Cameco. So they're all coming off. Do you provide ideas for your subscribers on being tactical and managing risk, or are you more of a buy and hold guy?
We're more of a buy and hold. We do track the sector on a daily basis and we do report on technicals. But generally speaking, we're in this for the long haul. So for the past few years and continuously at this point, until and unless we get to a considerably higher uranium price and further into more of a mature level in the cycle, we tend to accumulate on weakness and hold for the long term.
Okay, is cheap oil competition for it, and would sharply higher oil prices actually be a tailwind for uranium?
I mean, theoretically, yes, it might make the case for new nuclear builds better in an environment where you have very high natural gas and oil prices. But generally speaking, not really. It tends to not really correlate to anything else other than in this particular environment, just broad equities. There's some correlation, but the commodity
Okay.
really exists kind of in its own little world.
What do you think about things like, I know one of the guests I've had on before has been, uh, you know, likes this. Do you believe in trusts? This is a royalty trust, UROY.
I
Any
think it's an
view on it?
interesting play. Yeah, it honestly, it really surprised to the upside when the sector ran back in
Up
2021. And
21.
their last couple of royalty deals, I think, were pretty impressive. But it's probably also generally a quote unquote safer bet. But it had a really, really strong run.
Yeah,
I mean,
that's a nice little base it's building there too, Justin.
yeah, definitely, definitely. And a
So
lot of stocks in the space are trying to build out
they
that base as
they
well.
look like that. Okay, so
Yep.
what they say. So it's pretty quiet. People are probably calling you and going, "Boy, this is boring. The market's flying. When are these uranium stocks going to get in gear?" But here's a saying that you could tell them: that markets bottom in silence and
Mm.
top with violence.
Oh, I like
So
that.
we're in the silent
Yeah.
basing. And what's that expression? The longer the base, the bigger the launch into space.
Right. Yeah.
So, now's when you have to be patient, right?
Indeed. Yeah. There's a lot of patience necessary for this investment, and you have to have a long-term thesis on it. I mean, you can trade the charts. If you want to trade it as a momentum play, wait until flows come in until you see high volume breakouts. Typically in that case, by the time you buy that breakout, you're 20, 30, 40% up off the bottom.
Right.
And that's totally fine. You've de-risked in the waiting. There is opportunity cost in the waiting, right? But
Yeah.
accumulating on weakness and treating it as a contrarian bet has worked out very, very well for us. And so we're
So
going
you
to
don't go all in. It's a portion of your portfolio. The
100%.
high risk, upper end of the pyramid. Don't do what I've done. I've gone all in on, golds and stuff. I do that. And so people have to recognize that, it's not their, retirement money. It's money. If you lose it, you can still pay your mortgage.
Exactly.
Right.
Exactly. It's very risky. It's very volatile. Even someone like myself who feels an incredible level of confidence in where this is going, I still have a diversified portfolio. I think maybe 50 to 60% of my investable net worth is in uranium stocks, but I still have diversification across other asset classes, still hold some cash. I still do a bit of trading, even though my core uranium portfolio is essentially a buy and hold portfolio. And I am here in the United States, so we have, short-term capital gains definitely hurt. So that keeps me from over trading. So those sort of things are what we keep in mind. And we always recommend to people to enter into their positions over multiple tranches, over at least multiple weeks, if not multiple months, because the market gives you days like today and opportunities like we've seen on a number of cases over the past 18 months.
Everything can happen.
Anything can happen. Yeah.
Everything will happen.
Yeah. 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 And the uranium price is going higher.
Yeah. What is behind the shortage and difficulty of getting uranium? And you talk about there's a couple sources, the stuff you're pulling out the mine and the stuff that's out there, different grade of uranium. Maybe you could clarify it for me and our listeners. Yeah.
Sure. Yeah. Well, it's historically speaking a very, very slow commodity to respond to price changes. So in the previous market, when we saw the price go from $10 a pound to $134 a pound in less than 4 years, 2 new mines came online during that period of time. And one of those had been in the development process for multiple years. That was Cameco's Cigar Lake, which is currently producing. Another one was Paladin's Langer Heinrich. There were over 500 companies at the top of that market in the uranium space, and Paladin was the only greenfield project. So it's a very, very slow to respond commodity, which tends to lead to these price spikes. And you go through periods of time like the previous decade where you have such an abundance of above ground mobile inventory that allows the utilities to really settle into a feeling of security around supply. They can access pounds across the fuel cycle at will, relatively cheap. Russia, of course, became a very big provider of conversion and enrichment and enriched uranium.
That's over.
Yeah, well, it's not necessarily over, but access to the West is complicated, to put it lightly. So that whole period led to somewhat of complacency amongst the nuclear utilities.
So we have a supply chain issue then.
Yes.
In uranium as well as everything else, but there's still, we had this for every corporation. They didn't stockpile, they didn't warehouse, they had, what was that, just-in-time delivery. And it sounds like that's the way the industry is still going about it, at least users, not the producers. The users have this sense, you say, of complacency when they should probably be warehousing and storing now.
Yeah, it's slowly shifting in that direction. So historically speaking, nuclear utilities will purchase the bulk of their needs on the long-term contracting market. Okay. However, during the later part of the last decade, middle to the later part of the last decade, there was so much above ground mobile supply that utilities secured a lot of supply coming from the spot market and coming from something called a carry trade, where traders would actually secure a 2, 3, 4, 5-year contract with the utility and buy the material on the spot market, add the cost of carry, add a little bit of profit. And that allowed the utilities to sign these shorter term contracts and avoid stepping up to the producers like Cameco and offering what they needed in order to support their operations. This, of course, hurt producers really badly for a number of years. And that is slowly shifting. So we're already at 116 million pounds contracted year to date, halfway through the year. It's by far the most volume we've seen in the term market in over a decade. So it's slowly shifting.
What's the 52-week range, Justin, on uranium?
For the price of uranium itself?
Yeah, yes, 52
weeks. Let's see. Okay, so
low to high.
It peaked out, let's see, because this is beyond 52 weeks. It hit $64 a pound last April, but now we're in early part of July. So 52 weeks is probably somewhere about 46, 47 bucks to 57.
Okay.
Yeah. And we're at 55 and a half right now.
Okay. You know how bullion dealers always say that, you should take delivery of the physical. You don't recommend. Do you recommend that to your clients, Justin? Because you might have some turnover of your subscribers if you did that.
Yeah, no. Well,
I mean, does anyone ever want to just bury some uranium in their backyard?
Everybody probably has some uranium in their backyard. It's everywhere.
Why?
It's really abundant. It's super abundant in the Earth's crust. It's probably low grades in your backyard, but I guarantee you pick up a shovel full of dirt, there's a little bit in there.
Wow.
No, but I think having some exposure to the pure play commodity in whatever vehicle of your choice is probably a wise idea to kind of de-risk the portfolio a little bit. Of course, generally speaking, the miners, when risk is on, the miners will typically outperform the commodity substantially. Right. Which the small and mid caps did. Of course, they have corrected far, far more than the physical trusts have over the past 18 months in this big correction that we've had. But yeah, the bet on the commodity going higher is really the easiest bet I could possibly make right now. The equities are certainly getting churned. Based on
I wanted to ask you that because, I've seen it happen with miners. If we're on the verge of getting some type of correction, and, this is the opposite action of uranium, it's getting pretty violent, right? Down, up, down, I think it's a topping mode. There could be one more high in there, but the divergence is developing. Will uranium issues be more immune if we had something that no one thinks can happen again, like a 30% sell-off in the market?
Oh, I doubt it. I mean, everything gets sold in a liquidity event.
All right.
Yeah. I mean, the only thing that could possibly offer a bit of protection would be if that happens to occur during a period where the spot price of uranium is on fire to the upside. That might create a little bit of a safe haven. But if we see a fishing line on the S&P, everything's going to get hit. And that's going to be the case for uranium equities as well, most likely.
Okay. Well, I'm going to stop sharing here, Justin, and maybe you could share and show people where they could follow you and won't be interrupted like you were about 100 times in this interview. I hope you can forgive me.
No worries.
I'm the interrupter. So, I want people to educate themselves about uranium. And
sure.
And you're known to do a great job of that, Jason.
Thank you. I appreciate that.
Helping people do due diligence before
right
they jump into the frying pan.
Right. Yeah. Well, I'm relatively frequently on Twitter. Obviously increasingly less so just for my own mental health, avoiding social media too much. But I'm still there. There's a lot of very, very intelligent people. I've made some amazing friends and some very important contacts through Twitter. So it's worth following myself and a number of other people on Twitter if you're interested in this investment case. You can also find us, I'll share my screen here, at uraniuminsider.com. This is the homepage of the website. And if you're interested in our services, you can go to the newsletter page. We have multiple options, quarterly or annually options to subscribe. And this, our return to date, this is 4 years ago is when we launched this thing in 2019. And we've almost 4x'd our investment, even with this 35-40% pullback over the last 18 months. So it's been quite the ride.
Is that based upon your recommendations, or do you manage a fund?
We don't manage money. We do have a model portfolio that we call our focus list portfolio. And
that's where you get the numbers off your
exactly.
model.
Yeah. And it's fully 100% accountable. So that is based on the exact moment or the exact day that we take on a trade, and all of our buys and sells over that period of time. Yeah.
Okay.
Yeah.
All right,
and
cool.
URA, to give some example, URA we use as a benchmark for the sector. Over that same period of time, it's up, I think, about 110%. So we
nice outperformance. That's like a guy beating the S&P by double.
Right. Yeah.
And they do cartwheels just to beat it.
Yeah, it's not easy to beat the market. So we're
Yeah.
pretty proud of that, but it's taken a lot of it's been an exhaustive enterprise.
It
This
sure
has been a
is.
difficult trade, and
I'm only 35. Anyway, you definitely, it can take a toll on you.
it's
So
not for the
you
faint of
have
heart.
to,
Yep,
yeah, and you just have to really realize that it's just money. You're not
exactly.
going
Yeah,
in for a radiation treatment.
right,
Okay. If you
right.
lose money, don't go fetal and use less leverage and be able to sleep at night.
I'll tell you our recommendations that we put in every single newsletter. Make a rational allocation to the sector, because the sector punches above its weight when it does run. You don't need to have oversized positioning. No margin, no leverage. Enter into multiple tranches, enter into positions over multiple tranches. Avoid short-term options. That's basically it. And keep a long-term view. If you're looking for a 6-month trade on this, I don't recommend you go into uranium. If you're looking for an outsized opportunity for the coming years, that is an energy, a clean energy trade, and a very obvious commodity cycle, I think that this is going to offer immense upside, and you have to expose yourself to potential downside volatility in order to have the opportunity to that upside. You can't have 2, 3, 4, 5x gains in stocks that are just like slow, boring, safe blue chip stocks for the
Okay,
most part.
let's say people are they have a 30% drawdown on, and that can happen, right?
Sure. Yeah.
All the time.
Yeah.
So is that when they should be deploying a new tranche? Or what if they're all in and they're down 30%? Is there a time to say, you know what, I'm just going to get out, step aside, take my loss?
It
You don't
really
think
has.
so?
It's hard to just answer that broadly, because everybody has their own
Yeah.
individual goals, their own individual risk tolerances. But I can say, historically speaking, because of the level of communication we have with retail investors in this space, that when we have Twitter comments and YouTube comments and the occasional email of frustration,
Yeah.
if we
It's
go
an
back and
low.
actually chart that,
Yeah.
those points always mark points that in hindsight would have been intelligent to deploy capital.
Okay. Will you ping me in August, September?
Sure.
All
Yeah.
right, Justin. You know what?
And
You survived an interview with the interrupter. You know what that makes you my trading warrior brother.
all right. I appreciate that.
It
Yeah.
really was really a pleasure meeting you. And I can, when you talk to someone for a few minutes, if they know,
Sure.
so
Yeah.
I hope that people keep an open mind and check out what you have to say.
Thanks, Dale. I appreciate that.
All right, everyone, follow Justin at Uranium Insider and go to his website, check it out. And I concur that there's got to be some kind of solution besides windmills. Thank you, Justin.
Indeed. Well said.